Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure to recognize 2 official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello everyone, I'm Dong Jiaqing Tony. Now let's start today's group goodnight session. First, let's take a look at the first thing. Let's see how lively things were yesterday. Yesterday, at the end, we saw that the futures market didn't open very well, but the index actually closed quite nicely later on. Of course, there was some new news driving this. Let's see if this could form a new trio of AI leaders. We'll take a look at that in a bit. Also, since we're always talking about AI, we should also try to identify if there are any stocks that could make a comeback besides AI. Of course, some of these are still more or less related to AI, but at least they won't be those stocks that have already shot up so much that you can't even see their taillights anymore. Let's see if there are any such opportunities to share with everyone. Alright, first let's take a look. Alright, so on Monday, when this news came out yesterday, it really boosted the overall sentiment again. It was announced that they would invest $100 billion in OpenAI to build a new data fund center and related infrastructure. The two parties have already signed a memorandum of understanding for cooperation because OpenAI and NVIDIA's other clients may have some exclusive business interests. So NVIDIA stated that its cooperation with other clients will not affect the rights of those other clients. This is the situation regarding NVIDIA's involvement in AI. In fact, OpenAI has been extremely proactive lately. When Oroco released its financial report, they announced that, when Oroco published its financial report on September 9th, they mentioned that they had received a huge order worth over $300 billion, which pushed their total operating revenue past $150 billion. Originally, it was only $100 billion, but after adding this $150 billion or so, and then adding this $400 billion after another $300 billion, the total broke through $450 billion. Later, it was confirmed that the largest part of this came from OpenAI. So you can see that OpenAI has been extremely active recently. OpenAI also recently placed a huge order for ASICs worth $10 billion with Botcom, showing how aggressive Botcom is as well. In addition, Oracle has also been very proactive since May. It's just that when Oracle first mentioned it in May, the market didn't really make the connection. Back in May, Oracle said it was going to buy $40 billion worth of NVIDIA GB200 AI chips, which is about 400,000 units, to build large-scale AI data centers. And these are meant for OpenAI's use. This announcement actually ties back to the Stargate project that was mentioned around the time Trump took office at the beginning of the year. This project is a collaboration between OpenAI, Oracle, SoftBank, and the Abu Dhabi Investment Authority, called MGX. They said they plan to invest $500 billion in the Stargate project by 2029. However, this project, later, when DeepSeek came out, the project suddenly cooled off for a while. But it looks like this case is still moving forward now. In May, there was such an announcement. Let's take a look at why we call them the 3 AI Musketeers. It's actually after seeing this chart that I made the connection. This chart basically completes the circle. First, on the far left, in the lower left corner, it talks about the Stargate project, which involves purchasing $40 billion worth of GB200 chips. NDR, of course, is investing even more strategically putting $100 billion into OpenAI. After OpenAI, they threw in a $300 billion, 5-year, $60 billion per year computing power contract to Oracle, which really completes the circle. It looks like this is shaping up to be a long-term partnership. But actually, from our perspective, what's more important is NVIDIA's supportive stance toward OpenAI. This part is actually more like a strategic investment. In the tech industry, you often see that when a startup is still small, big companies, whether upstream or downstream, can invest in it early on and then wait for it to grow bigger. Once the company grows to a certain scale, they can get a pretty good return, not just in terms of business performance, but also in stock price gains. This strategy has actually happened before in the tech industry, so this is NVIDIA's best strategy. Of course, some people will criticize this, saying it's just moving money from the left hand to the right hand, then from the right hand to the left foot, and then kicking it back to the left hand. It's true that some people do say this, but let's take a closer look. After all, the initial amount and the function involved aren't just being shuffled around. This is still a positive sign. Why? Because it shows a continued investment in basic infrastructure. It looks like market demand is still there. Otherwise, there wouldn't be such a large-scale investment happening right now. So, when it comes to the AI Three Musketeers, even though they're not literally called the Three Musketeers, this kind of investment structure is something I think we'll continue to see. There will likely be other big companies forming alliances and collaborating with each other. As long as this kind of activity continues, it will drive the stock market's performance. By the way, just to add, in the US stock market, a common way to boost stock prices is through market cap management like share buybacks. But that's how things were done before, and it was easier to do in a low interest rate environment. Because financing costs were lower, it was easier to create market value. But now, with AI driving things forward, what we're seeing is a more collaborative approach emerging. In addition, there are also things like mergers and acquisitions, which is another common way for companies in the US stock market to boost their growth or market value. We expect these kinds of activities to keep happening this year and next year. Why? Because the market is very active and companies are motivated to expand. So, this is actually good news and a positive development. Yesterday, or rather Monday, the market surged by 3.93%. Here, we actually saw a report from foreign media stating that NVIDIA's investment shows that the demand for AI infrastructure is real and still growing, and will continue to expand. Now, let's first talk a bit about OpenAI. Hello, everyone. I'm Tony Dong Jiaqing. So it's a company that hasn't gone public yet, and in fact, it's just recently transitioned from a non-profit to a for-profit company and is still in the process of changing, because at the end of last year, OpenAI and Microsoft had some disputes, particularly over equity and differences in their visions for the company's direction, so now we can see that they're making a shift in the nature of the company. OpenAI made many moves. Altman, their CEO, he's a smart guy. You can't be dumb if you're working in AI. He's going to be very proactive. What I'm saying is, you don't have to focus solely on OpenAI, because OpenAI might not be publicly listed, but the partners and shareholders might be. There are parties that benefit. Microsoft is the most likely. If OpenAI goes independent, Microsoft would lose out. Their capabilities are strong. Their model capabilities are excellent. even though it surged 3.93% yesterday. That big red candlestick, if you have even a little knowledge of technical analysis, you'll know this is a bullish signal. In theory, there should be good performance coming up. So we'll keep watching closely. Given the current market atmosphere, I still think it's favorable, a higher chance for it to make a significant upward move. Of course, yesterday. As for Nvidia, their last collaboration was announced just last week. They'd invest $5 billion in Intel. That caused Nvidia's stock to rise, and Intel's stock also went up. But yesterday, Intel's stock fell, mainly because it had previously jumped, so now it's experiencing a pullback. However, we need to pay attention. As long as that gap isn't filled, it's still considered a positive signal for Intel. In addition, we should also mention that in August, the US government acquired a 10% stake in Intel and SoftBank, invested $2 billion in September, and Nvidia invested another $5 billion at the end of the month. In theory, Intel should have received about $15 billion in cash. Hopefully, this will help them hold on for a year or so, and we also hope that the cooperation with Nvidia can allow he to turn things around. But let's not get to the point where TSMC has to bail him out. That's my minimum expectation for him. Intel is relatively weak right now, but I want everyone to pay attention to when Intel can stop its decline. After it stabilizes, will it move sideways? If that's the case, then Intel might not necessarily be a drag on the market anymore. In addition, there was also a jump in Oracle's stock. Of course, Oracle's technical capabilities are much better than Intel's. In fact, Intel used to be very strong technically, but over the past decade or so, it's really gone downhill. As for Oracle, if you look at the recent news from Morgan Island University, you'll see that it's been consolidating sideways around $300. After this consolidation, there's a good chance for a breakout. I think this is very similar to Nvidia's big green candlestick. So, there are still opportunities ahead, and in the fourth quarter, we should keep a close eye on Oracle's performance. Besides its relationship with Nvidia and OpenAI, the biggest news for Oracle in the past couple of days is that Trump and Xi Jinping have finalized the TikTok deal. Here, we've seen reports in the market suggesting that Oracle could see an increase of $1 to $2 billion in annual revenue from this deal. It looks like this revenue boost would be a very tangible benefit for Oracle, much more concrete than the $300 billion figure associated with OpenAI. This could potentially provide an immediate increase in revenue. With TikTok, we still want to remind everyone to pay attention. This might come up again today. Although this was mentioned yesterday, I think it's important enough to bring up again. Oracle will help out here. The new version of TikTok's algorithm in the US will need to be retrained, and of course, Oracle will continue to provide the cloud data storage security it has already been offering. The main reason the US government is requiring TikTok to be sold is actually due to national security concerns. This is something Oracle has already been doing, but what's more important is that they need to rent a copy of the TikTok algorithm from ByteDance and retrain it from scratch. I think it's important to point out, did everyone catch the word training? Besides seeing training here, you'll notice that whenever it comes to AI large models or large language models, or anything related to artificial intelligence, you'll often see the word training. So, if training is involved here, and this is just my personal opinion, it might not necessarily happen, but what immediately comes to my mind is whether OpenAI might play a role here, because OpenAI specializes in large language models, and one of its main strengths is training machine learning models. I think this is something everyone should pay attention to, and hopefully we'll see a good collaboration and some positive results come out of it. On the other hand, what's more concrete on Oracle's side is that they'll continue to manage cloud security, and after this, ByteDance won't be able to access information from US users or control the algorithms within the United States. In other words, once the algorithm is fully implemented, Oracle will have complete control over it. Because of all these clues pieced together, I think there's a real possibility that OpenAI might actually play a role in this as well. In addition, the White House added some more details yesterday. For example, in the future, ByteDance's stake in the US will not exceed 20%. Another point is that, since the White House, or rather, the US government, has previously invested in Intel and MP Materials, the rare earth company, and has talked about wanting to invest in domestic defense stocks, someone asked the White House whether the US would invest in TikTok, since TikTok is clearly a profitable company. If they were to invest. Actually, it's easy to see how there could be immediate returns, but the White House made it pretty clear the US government will not take a golden share, so-called special management shares, nor will it appoint any board members. Basically, going forward, this will be handled by a new team. Yesterday, they mentioned 3 people, Larry Ellison from Oracle, someone named Anderson Howick or something like that, and another from Silver Lake Capital, who will be in charge. It's a collaboration, but there are new investors involved. I'll introduce them to everyone in a bit. TikTok continues to be a major focus, since its user base is no less than Facebook's, and its user engagement is extremely high. Whoever gets access to this user data is basically striking gold, so this is definitely something to keep an eye on. On another note, there are some updates from the US side, so next I'll fill everyone in on some American news. First, in the US, Trump signed an executive order designating Antifa, which is considered a far-left group, as a domestic terrorist organization. This move was basically a response to the incident involving the death of Charlie Kirk. In addition, the H-1B issue, yesterday it was still having an impact on the market, affecting the tech industry and some other sectors as well. Here, the highlighted section shows India's situation in the 2024 fiscal year. India uses the most, accounting for 71%, while China is second at 12%. The proportion is much lower because India, an English-speaking country due to its history as a British colony, naturally has better English skills than China, so their numbers are higher. Chinese students mainly refers to people related to China. Actually, starting from Trump's first term, there has been some pressure, so the number of people looking for jobs in the US has gradually started to decline. This is still an issue because the US doesn't have that many STEM talents. This will be a medium to long-term problem for the US. All major companies, especially in tech, face this issue. They will gradually start lobbying, so this bill. It's expected that there will be significant changes to this bill in the future. There will likely be some degree of revision. The intention might be to prevent companies from abusing the system, but in terms of specific measures, we should see some modifications. Another unfortunate reality is that, in addition to affecting Indians, another group impacted is doctors and healthcare workers. If you look at the orange areas, Those are the states with a higher proportion of foreign doctors. And physician here doesn't just mean doctors. It also includes some nursing staff who are classified as physicians. Here, what he's pointing out is that, aside from New York, which has a large foreign-born population, and aside from the East Coast where there are more such areas, if you look at the middle of the country, the vast Midwest is highlighted. The so-called Rust Belt, with its swing states, really needs these people. Foreign doctors practicing in rural areas, that's how it works in the US. There are good doctors, but they tend to serve high-end clients because of private insurance. If you want medical resources in rural areas, you have to rely on foreign medical professionals for care. That's just how it is. Now, it seems like there's finally some response to this, which is why there are exemptions being granted. In principle, I think these exemptions will continue, and here's why. First, as we just mentioned, the tech industry has a huge demand for top talent. Second, rural areas need doctors. So, this approach will likely change in the future, and we'll see how it evolves. This is an area that's relatively less related to investment. In addition, there's a news release from the Department of Labor Statistics. They're postponing the PCE data that was supposed to be released this Friday to the end of October. They said they made some adjustments to the survey and need to make some modifications, so they're pushing it back. The release date has been pushed back a month. We should note this. First, is this change reasonable? Is the timing sensitive? It is sensitive. Why? Because this is a major adjustment after the new head of the Statistics Bureau took office. Is PCE data important? Extremely important because PCE is inflation. Subtract PCE from the nominal interest rate, and you get the real interest rate. So, when determining the real or neutral interest rate, the inflation number becomes extremely important. The Federal Reserve pays close attention to the core PCE number. Any changes in survey methods, data, or related revisions and releases of this number significantly impact monetary policy. If you're still hoping for a rate cut, remember this number's release date. Any adjustments should be noted for their potential impact. If there's a significant downward revision, it's really important for you to see whether there is supporting evidence for this number, something that convinces data users that the adjustment aligns with statistical principles and market expectations. So this part is very important, and I wanted to add that. Also, there's another issue about the government shutdown that needs to be clarified. To clarify, previously the big, beautiful bill was passed, and the debt ceiling was also raised. So what's the holdup now? The issue is that when the new fiscal year starts, according to US law, all the budgets are divided among 12 committees, and each committee has to approve its portion one by one. Of course, the process is stuck because they can't get enough votes in some committees, so everything is stalled. October 1st is the deadline, and there are rumors that Democratic members of Congress are planning to meet with Trump to avoid a government shutdown on October 1st. It's unclear who will make concessions. But for those of us who aren't Americans, what I hope everyone can see is that there will be a compromise. If it really comes to a shutdown, aside from gold likely benefiting, it's hard to think of any other sector that would really gain from this situation, especially if it's a 3 or 5 day break. The impact is small, but if it goes beyond a week or two and market sentiment turns negative, it's a different story. I remind everyone and hope they can quickly reach a consensus before the end of the month, and not let this government shutdown happen. This is not a good situation for the US. Additionally, yesterday Trump made another unexpected comment about Telano. He claimed this drug is linked to autism, but there's no scientific evidence. He also told pregnant women to avoid using it. Tylenol, we can draw an analogy. Its status as an over-the-counter painkiller or cold medicine in the US is similar to Panadol in Taiwan. If any official were to say something about Panadol, that there's a problem with Panadol, it would cause a huge commotion. This isn't about the stock market, it's about people's daily lives, because a lot of people just take Panadol for a mild cold, sleep on it for a night or two, and see if it helps. It's even more so in the US because seeing a doctor is really expensive. So when I was in the US, I also took Tylenol, of course. Just when I wasn't feeling well, I'd take a few tablets. When this news came out, it actually had a pretty big impact, so it affected Candu. This is a subsidiary of Johnson, originally a gynecological brand specializing in uterine procedures. It's the biggest brand. So yesterday, its stock plummeted, but before the market opened today, it surged. In the UK, they've already issued a notice. The British government publicly told its citizens, especially pregnant women, not to worry about taking Panadol or Tylenol because there's no direct link between these drugs and depression. Trump often does things like this. He put on a show during COVID as well, so let's not dwell on that. The US government, specifically the Trump administration, is reevaluating a $2.3 billion loan for a Nevada lithium mine. This loan was approved during Biden's term, suggesting disagreements on its content or recipient. However, I believe this lithium mine will likely be maintained. Why? If the US wants its electric vehicle industry to reduce dependence on China, this lithium mine is essential. Even if Trump dislikes EVs and prefers gas cars, the industry's development holds strategic importance. For example, shutting it down now might lead to future regret. We don't know. Next, let's review comments from Federal Reserve officials. Muslim is referring to Louis Muslim, who said he supports rate cuts, considering them a precautionary measure. But the issue is, as he later mentioned, and we'll get to this in a moment, among Federal Reserve officials, aside from Mester, who is very dovish, most of those who spoke yesterday were either hawkish or leaning hawkish. Muslim said that considering inflation remains high, there's limited room for further rate cuts. This is consistent with my own view. There is room for rate cuts, but it's relatively limited. Boistig also expressed concerns about inflation and declined to support another rate cut in October. This is actually a very hawkish stance. Also, Hemek from Cleveland, who succeeded the previous official, I think the previous hawk, I forgot her name, but anyway, she was also pretty hawkish. After he took over the position, his stance was also rather hawkish. He kept saying that he remains highly focused on inflation and that caution should be exercised when cutting rates to avoid the economy overheating. He also mentioned that inflation has been above the 2% target for 4 years now, so it might be necessary to maintain higher interest rates for a longer period in order to bring inflation down. Surprisingly, even though he came from Goldman Sachs, his views on interest rates are actually quite traditional. So that's the situation in this regard. Barkin from Richmond is relatively more moderate. He said a small portion of tariffs is passed on to consumers, but this transmission will take more time, though it has started gradually. This stance is more neutral. Of course, the most dovish yesterday was the new Fed Governor, Marana. In her first speech, she said she believes there needs to be a significant rate cut to avoid harming the job market. This echoes Trump's call for the Fed to cut rates aggressively. Because of this news, there was a notable reaction in the gold market yesterday. However, if we look at the numbers, about 3 to 4 members are against aggressive rate cuts, and only 1 is in favor of a more aggressive cut. You can see that, so far, the dovish voices among Fed officials haven't really shifted the overall stance. This might only change if there is a breakthrough in personnel appointments, or if inflation drops significantly. So, the earlier mention of the PCE data revision and its upcoming release is actually very important and has been further confirmed. There's also another relatively positive piece of news. RBC, the Royal Bank of Canada, has a team that said if the Fed cuts rates, meaning if rate cuts happen before or during a recession, then this will have a supportive effect on the economy, so the market will go up. Basically, according to their research, after a rate cut, the S&P 500 tends to rise 13% to 14% within 12 months. If the rate cut is preemptive, not during a recession, the return is even higher, possibly up to 21%. But if the cut happens right before or during a recession, the performance is relatively worse. After a recession ends, market gains are relatively small. But I want to explain something. I saw this news yesterday and could have shared it then, but I waited until today for a reason. The main point I want to emphasize is that when you focus on the recession, you're only looking at the outcome, not the cause. As investors, we care more about the reason behind it. What exactly is the cause? If this time the reason is that the rate cut is preemptive and it actually has an effect, then if next year, around the second or third quarter, you see rescue efforts stabilize the market and inflation hasn't picked up, a successful rescue. Of course, the stock market's performance would be very good, but I care more about the reason and process, not just looking at the result and saying it will definitely turn out a certain way. This is like the Mid-Autumn Festival reversal. The key isn't whether the market reverses during the festival, but rather the reason for the rise. If, after the Mid-Autumn Festival, the reason for the increase hasn't been undermined, then a continued rise is more justifiable than just looking at whether there was a reversal during the Mid-Autumn or Dragon Boat Festival, or how many times it reversed. So, while there is good news, I think everyone should focus more on the logic behind it. Let me talk about the second point for today. The second topic, will the market's focus always be on AI stocks? Big AI or small AI, old AI or new AI, it's all AI. But that's not the case. We've seen turnaround stocks emerge. While still somewhat AI-related, consider the bigger picture. The main thing is tariff uncertainty has greatly reduced. Inflation is still high, but the Fed has room to cut rates. So, turnaround stocks are appearing. Everyone should pay attention. The first turnaround stock we'll discuss, as usual, is from the Magnificent Seven. Honestly, we can only confidently call it a turnaround stock because Apple has shown signals. Otherwise, we wouldn't dare use the term turnaround stock. This trend is taking shape. Why? Its market cap is big and representative. On Monday, it surged 4.3%, and last Friday it went up over 3%, if I recall. So, in 2 days, it rose 7%. You can see it formed a bullish candlestick, a sign of upward momentum. The main reason for this surge is the new iPhone effect driving this. Even though everyone knows that in recent years, the iPhone is basically, well, I often joke that the only thing that changes is the color, everything else stays the same. Since I don't use an iPhone myself, I can make fun of it a bit more. But the fact is, it still has that appeal, and from their back-end data, you can estimate roughly how many people are due for an upgrade. I think that estimate is pretty accurate. Looking at it from this perspective, I think that even though this appeal might gradually fade after 2 or 3 months, it has indeed driven the stock price up. That's a fact. And this has also boosted the performance of other related stocks. First, let's look at the classic Apple supply chain stocks. The first one that comes to mind is Qualcomm, because their chips are used in the devices. Their stock also surged by 1.72%, reaching nearly $170 per share. Of course, we have to mention why Qualcomm might be weaker in the future. The main reason is that Apple plans to use its own chips for data processing. Even though their partnership ends in 2027, but everyone knows Apple will gradually reduce Qualcomm chip usage. Looking at this, Qualcomm was relatively weak before, but now, with Apple's stock surging, it has lifted Qualcomm. We even think that, in the short term, since the phase-out period is still a while away, it's only 2025 now, and the partnership ends around March 2027. There's still room for a rebound right now. Qualcomm is also proactive, expanding into new fields like automotive, IoT, and AI. For automotive and IoT, it might take longer to see results, but in AI, they're collaborating with NVIDIA, offering future hope. In the short term, Qualcomm could still perform alongside Apple. When it comes to Apple concept stocks, there's an old and well-known name, Skyworks. This RF component company surged 5.09% on Monday, and of course, that's closely tied to Apple's performance. Naturally, it's moving in tandem with Apple, but if it can make breakthroughs in non-mobile markets, that would be fantastic news. But in the short term, what we're seeing is that it's moving together with other Apple concept stocks. Another one is Supermicrocomputer, SMCI. Previously, its big issue was that its earnings reports often gave investors unexpected surprises. However, looking at it now, there's a chance for growth as the AI server sector continues to heat up. In the US, AI servers are a pretty hot topic, and capital expenditures in this area are still on the rise. There's demand for AI servers locally in the US. More orders are going to Taiwan. I'll explain more about that shortly, so this is very important. Recently, they've been looking into chiplet technology. Why? As computing power increases, those 3 issues become more critical. So, chiplets are something they've reportedly been working on. This area has been performing well recently within the AI sector. The concept of small AI or new AI has been gaining traction and showing movement. We still see the concept of AI servers, an early idea. There's another US company that makes servers, HPE, Hewlett-Packard Enterprise. HPE used to handle servers and was a division spun off from the commercial computer business into its own company. This company is stronger. It's not a comeback story, as its stock has been rising. A comeback is more like Dell's situation. Everyone can reference this. Dell participated in Titac's investment team. News later confirmed this. Dell might not have a huge stake, but participated. Dell's involvement, led by Michael Dell, is not surprising. This guy started out in Texas. I remember it was in Dallas. He built his business here in Texas. Previously, Oracle had a plan called the Texas Plan. So here, I think, plus Dell and Oracle, they basically emerged around the same time as the new tech giants. Back then, they were called the new tech giants, and they came onto the scene around the year 2000. So, they probably have a personal relationship, which is why there was involvement in the TDAG investment. So, we can keep an eye on whether this might have an unexpected positive effect on Dell. Additionally, I want to add that just as I was finishing up this file today, I saw that Taiwan released its export orders for August, and they were really good, almost a 20% year-over-year increase. Exports of electronic products to the US surged by 65%. That's right, the added tariffs have really hurt Taiwan, and it looks like the traditional industries are really suffering. But when you look at AI, high-performance computing, and cloud-related products, those areas are still extremely strong, with total orders growing by nearly 20%. To be honest, with demand this strong, I don't really care about the tariffs. If you need my products that badly, then who's going to bear the cost of the tariffs? It's certainly not going to be me, right? Now, when it comes to AI, if you don't buy from Taiwan, are you going to buy from China? That's even less likely. So, for Taiwan, we've basically become a market of one. Southeast Asia can't make up for this, and South Korea might not be able to take the lead. Maybe South Korea has a higher chance of producing finished products, but Japan currently has very few stocks. So, looking at Taiwan, it's in a better position. If we look at this wave of growth, we should pay attention. As long as export orders don't drop, our stock market won't fall. Why? Demand is that strong. We'll keep rising until Americans can't afford to buy. There's also another turnaround stock we mentioned, which is Marvell. It's a company that came out relatively early. It's been under pressure, but it finished consolidating and has a chance to perform. Here, I also want to remind everyone that this is just something to pay attention to. I'm just telling you to keep an eye on it. Why do I say this? Because in front of Marvell, there's a giant called Blockhound. Due to its technical capabilities and product market share, it kind of has the same vibe as AMD. In the past, AMD had Intel in front of it, and now it's Nvidia. For Marvell, the giant in front is Blockhound, so it's more of a second-tier player. But everyone can watch to see if it has a chance to turn things around recently. So, this is our own pick for a turnaround stock to share with you. In the next day or two, I might also help everyone look for other industries, besides tech stocks, that might have similar turnaround opportunities. We'll talk about that tomorrow or the day after. Now, as we mentioned yesterday, there's the Nvidia effect and the new Apple product effect, so you can see that the so-called Magnificent Seven concept stocks in Hong Kong keep climbing to new highs. I especially want to highlight Tesla. Tesla has also been very strong lately, rising nearly 1.9% yesterday, which is a really impressive performance. Other major players took a breather yesterday, but in the semiconductor sector, some still led the gains. Let's specifically talk about Teradyne, an equipment company said to be the third largest semiconductor equipment manufacturer in the US recently. Its stock has surged aggressively. Notably, this concept is moving up with hard tech stocks, continuing to climb. In addition, as Skywalk just mentioned yesterday, Coherent also went up, rising by 5%. On the weaker side, Astrolab, which is related to transmission, and Quiddo, also related to transmission, both showed relatively weak performance. But if we look at the semiconductor sector, yesterday's gains were represented by a strong bullish candlestick, signaling continued upward momentum. The Nasdaq shows relative strength, and the Nasdaq 100 is even stronger. The S&Amp Wink with Thumb sticking out experiences a similar situation, volatility low. Overall, equal-weighted stocks squeezed. Yesterday, they rose end. As for the Dow Jones, it went up slightly, but the increase was 0.14%, not strong. Looking more closely at this, actually, yesterday's leading rise in the Dow Jones was a bit weak because out of the 30 component stocks, fewer than 15 actually went up. Let's quickly take a look at the US dollar and related information, and then check out the pre-market performance of US stocks. Actually, yesterday, the comments from Fed officials were rather hawkish, but Trump's favorite, Miran, said that interest rates are too high and should be lowered, basically calling for rate cuts in the future. So, the US dollar index reacted yesterday by dropping. Technically, it rebounded to the red 20-day moving average and faced some resistance, so it started to weaken. Now, the 2-year Treasury was relatively strong, continuing to rise, because this week there was a corporate bond issuance, and yesterday the market digested that issuance. In addition, there was a surge in medium and short-term bond yields. So, U.S. Treasuries broke through the resistance of the 20-day moving average yesterday, and the 10-day moving average showed a similar pattern. As for oil prices, yesterday we saw that exports from Iraq and Kuwait increased, leading to oversupply, so oil prices fell on Monday. However, oil prices rebounded on Tuesday, because in recent days there was news that many European countries, basically all Western countries except the U.S., have recognized Palestinian statehood. The market believes that with so many countries recognizing Palestine, tensions in the region could rise, so oil prices. Today, oil prices are rebounding, but I personally hold a more pessimistic view. It's also possible that the reason these countries are recognizing Palestine is because Palestine might be nearing its end, since Israel's recent offensives have been quite aggressive. I think Palestine may not be able to hold out much longer, so this recognition at this time is more like a symbolic gesture, acknowledging its statehood. After all, recognizing its statehood doesn't really change anything. No one dares to actually send their country's ambassador to Palestine. So, it's basically just a show of attitude. Wang Jing just mentioned that, as you can see, on Monday there was a big jump of 1.67 yuan, and then you see that big red candlestick from today. Before market opened, I saw on Tuesday it went up over 1% again. Here, gold price nearing at 3,785, still very strong. This reflects future interest rate cuts. Cuts completed. This the initial cut. Outlook strong. There's also the issue of the U.S. government shutting down again, which could be a pretty favorable situation for gold, making gold investors quite happy. As for Bitcoin, yesterday we made a special note because we saw there was a $151 million. A $151 million long position was forcibly liquidated, so the market crashed. But looking at it now, whether it can stabilize is something everyone should keep an eye on, because this kind of forced liquidation might just be a one-off event. The most important thing over the next few days is to see whether things can stabilize, because Bitcoin mainly reflects the market's risk appetite. So, everyone should just keep an eye on it. I think unless you're actively involved, you might not fully understand, but for the rest of us, we can just treat it as one of the risk indicators. Next, let's take a look at the changes in US stock futures. Let's switch to the boom screen. Looking at stock futures here, we see the Dow Jones, S&P wink with tongue sticking out, and NASDAQ are fluctuating between positive and negative, but the range isn't very large. We'll have to wait for the main session to open to really know. For now, it looks like only minor changes. As for individual stocks, we've done a bit of sorting, so this is what I just mentioned, Canvio, which is the Telenor brand. You can see that the company's stock surged nearly 5.5% in pre-market trading because there's no scientific evidence of any connection. On the other hand, SRE, a utility company, performed relatively well. As for Boeing, they landed a big order from Uzbekistan. KLC, Korea, also performed well. SNC, as just mentioned, is not something we didn't notice, it did perform. CCL is that cruise company, and MOH is eBay. There are a few others as well. Let's take a look. Among the top 20 companies by market cap, Tesla and Palantir stand out. Besides those, Teradent continues to rise, up nearly 1% in pre-market trading. So, looking at the overall trend, the stocks that are on the rise are still performing well, which makes this group relatively strong. Also, let me talk a bit about the stocks that are declining. AutoZone released its earnings report today, but it seems like the market wasn't satisfied, so the stock is dropping. Vista is also down. These two are seeing the biggest declines. Colin dropped 1.82%, and then there's Renogen, which seems to be related to Johnson. It looks like one of their drugs was subject to intervention. Probably the regulatory authorities conducted some investigation. As for Nvidia, it's down as well. We should pay attention to whether it opens low but manages to close higher. ORAC also opened lower, so we can see that some of the large cap stocks are opening weak. After several days of strong gains in tech, the market looks a bit weaker today. But the most important thing is still to see whether the closing can turn things around. Let's quickly take a look. Yuan has basically stopped falling, and U.S. Treasury yields, after rebounding, are now fluctuating at high levels. What we need to watch is whether U.S. Treasury yields, especially the 10-year, will continue to rise. If they do, that's not favorable for tech stocks. As for energy and gold, gold continues to trend upward. Oil prices continue to rebound. This is pretty much the same situation we saw around 5 or 6. What's more important is still on individual stocks. Now, let's take a look at everyone's questions. All right, Anna, let me tell you, I haven't been feeling well myself. It's because I ran out of my allergy medicine for 3 days, so I've been feeling more tired these past few days. But I've started taking it again, so I think after Wednesday or Thursday things should get a bit better. Let's look. Today, we're still focusing on individual stocks, with some continuing to rise. However, Nvidia and Oracle appear weaker pre-market, so today might open lower. The key is whether the market recovers by close. In theory, even if Even if it doesn't recover by the close, the overall trend is still emerging, especially for Nvidia, which has shown strong performance. I want to point out again that Nvidia's recent strength has pressured others. Avago's performance has been affected, but no need for pessimism. After Nvidia's strong run, things will recover. Opportunities for sector rotation and rallies, so no need for pessimism. Let's check. No new questions. That's it for today's live stream. See you tomorrow.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.